Yes. Good afternoon, everyone. Welcome to MCQ revision day 4. We have completed almost all the topics in cost and management accounting. This will be the last session wherein we will be doing budget, marginal costing and standard costing, multiple choice questions. Okay. I hope my audio is clear to you. I will be starting off with budget and budgetary control. Yes. Question number 1. A favorable budget variance is always an indication of efficient performance. Do you agree? Important point here to observe is always an indication of efficient performance. Do you agree? Please observe. When will you have a favorable budget variance? A favorable budget variance is when budgeted cost is more, actual cost is less. And if it is happening always, then is that a good indicator? If it is happening always, it's not a good indicator, because you might be over budgeting, you might be taking more cost than necessary, correct? When you know the necessary cost is just 10,000, if you keep 12,000 as budget, you will then surely have a favorable variance saying I have saved money, but in reality you haven't saved anything, correct? So always if you have favorable variance, we cannot call that as a good indicator. Let me see. Option A says a favorable variance always indicates saving on the part. Always is the problem, correct? It is an indicator, but it's not always. Second, under all situations a favorable variance speaks about its efficient performance. Again same problem, all situation. Option C says a favorable variance does not necessarily indicate efficient performance, because such a variance might have been arrived at by not carrying out the expense mentioned in the budget. What if you have budgeted 12,000 and in that one of the expenditure you did not incur itself? Or what if you unnecessarily over budget? Correct? When you know you need only 4,000 rupee, you intentionally keep 5,000 rupee, and in that the extra 1,000 you will never spend. So in this style you can always say I have saved money, correct? Therefore C is the correct answer. D says none of the above. So the correct answer is option C. A favorable variance does not necessarily indicate efficient performance every time. Once in a while it's a good indicator. Always it's happening, it's not a good indicator. Next, question number 2. The budgetary control exercise is usually headed by top executive who is known as general manager, no. Budget director or budget controller, yes. Accountant of an organization, definitely no. None of the above. Option B is the correct answer. Budget director, he is basically the person who is in charge of the budget committee, the head of the budget committee. Budget controller, or if they say head of budget committee, you can go by that option also, head of budget committee. Question number 3. Which of the following is usually a short term budget? Capital expenditure, definitely no, that's a long term investment. Research and development, no. Cash budget, yes. Sales budget is a kind of medium term budget, because sales budget you don't make for 1 week, you don't make it for next 15 days. Cash can be for 2 weeks also, cash can be even for a week, correct? Therefore the correct answer for short term, the wording used is short term. If it was medium term, short term and medium term, I would have gone by both cash and sales, but question is very clear, they want only short term. Therefore the better answer would be to go with cash. Question number 4. The classification of fixed variable cost is useful for the preparation of flexible budget. Now for those who do not know, what is the meaning of flexible budget? A budget which is prepared for multi-level, 50%, 70%, 80%, 90%. When you are not clear whether in the next year you will be working at 50% capacity or 80% capacity or 90% capacity, you prepare budget for all possible outcomes. Therefore you are aware what all can happen, how much I may have to incur, maximum what's my cost, minimum how much is my cost. When you are not sure of your future level of activity, you prepare multi-columnar budget, and that is called flexible budget. For flexible budget, you need to first identify whether the cost is fixed or variable or semi-variable. So that was the question. The classification is needed if you are preparing flexible budget. Question 5. Efficiency ratio is extent of actual days avoided. No, it's not about days. A measurement of whether work is carried out with good speed or not. This is the correct answer. Let me read option C. Whether actual activity is more than budgeted activity. Actual activity more than budgeted activity. This is a measurement of your capacity. Correct? Your plan was to work for 10 hours budget, but you actually worked for 11 hours. This is a measurement not of speed. This is a measurement of your capacity. Correct? But if you want to measure your efficiency, you have to go by speed. A work which was supposed to take 10 hours, I finished within 9 hours. This is a measurement of my efficiency. So the correct answer is option B, measurement of whether the work is carried out with good speed or not. Next, question number 6. A budget report is prepared on the principle of exception, and thus only unfavorable variance is shown, only favorable variance, both are wrong. Favorable and unfavorable variance, both are to be shown. Understand? Budgeted cost was 10,000, actual cost is 10,000. No need to worry. But when budget was 10, actual may be 11, actual may be 9. In both cases, you should worry. Either you are over budgeting or you are under budgeting. Either you are over costing your customers, charging more to them, or you are undercharging your customers. Either way, you are doing a mistake. Therefore, it's important to know both favorable and adverse variance. It cannot be only one-sided, it should be both ways. Question number 7. Activity ratio depicts whether actual capacity utilized exceeds or falls short of budgeted capacity. This is not correct. This is not activity ratio. Whether the actual hours used for actual production is more than standard. This was the previous to previous sum question. Yeah, efficiency, speed. Third, whether the actual activity was more than the budgeted activity. This is the correct answer. This is a measurement of activity or capacity, or as you call it, volume variance in standard costing topic. Yes, option C is the answer. Actual activity is more than or less than budgeted activity. Question number 8. Purchase budget and material budget are same. Do you agree? First of all, I don't agree, because what is the reason? Options are given. Therefore, first you should be clear. Do you agree or not? Then they have given 4 options. You have to choose which one is correct. Yeah, please observe. Purchase budget, material budget. Material, when you say, you are talking mainly about raw material. But when you say purchase, it's a very big thing, very large ledger. Correct? There may be a lot of other than material things that you have purchased. Able to follow? When I say material budget, my focus is only on the main raw material. But when I say purchase, it is not just raw material, it is even additional material, secondary material, packing material, everything, primary packing, secondary packing, every other item can be included. Therefore, read option A says purchase budget is a budget which includes details of material. No, purchase budget is a wider concept and thus includes not only material but also other items. This is exactly what I told you. This is the correct answer. Purchase budget is different from material budget as it includes purchase of other items only. This only word is the problem. You cannot say only. That's the mistake. So I should go with option B. Alright. Question number 9. Purchase budget is prepared dash before sales. No. Why no? How much to purchase depends on how much you should produce, and how much you should produce depends on how much you want to sell. Able to follow? First you should do sales budget, and based on that you can come back one step and do production budget. From production you can decide how much I will consume. On the basis of consumption you can decide how much to purchase. Therefore, it cannot be done before sales. Sales budget is done first. It says after sale but before production. No, no, no. Option C, after sales and production, this is correct. Observe what I am writing. Sales, from their production, from their consumption, finally purchase. Sale of FG, production of FG, consumption of RM, finally purchase of RM. Those who are in the live chat box, is my audio clear to you? Can I get a quick reply? Those who are in the chat box, quickly respond. Yeah. Let's move on. Perfect. Question number 10. Relationship between budgeted hours and standard hours. Observe, budgeted hours, standard hours is dash. Both are for actual production. No, no, no. Budget and standard, how can both be for actual production? Complete wrong. Second, budgeted hours is for actual production, standard hours is for budgeted. No sir, they have done a mistake in the sentence. How can budgeted hours be for actual production? Very simple thing. Next one, budgeted hours and standard hours both are for budgeted. No. Observe, budgeted hours is for budgeted production. No confusion there. But standard hours, when you set, standard hours is always set for actual production. Correct? Observe what I am writing. 10 hours are required to make 10 units. Now what is 10 hours, 10 units? Budgeted hours, budgeted units. I have done only 9 units production. How many hours I should have taken? How many hours I should have taken? This is 9 hours and this is standard. Now this 9 will be compared with say 11 hours. That is your actual. That means, I repeat the sentence, very important sentence. Budgeted hours is for budgeted production. Standard hours is for actual production. Option D is the perfect sentence. Budgeted hours is for budgeted production. Standard hours is for actual production. Let's move on. Question number 11. A budget which is prepared in a manner so as to give the budgeted cost for any level of activity is flexible budget. Any level of activity, I told you something 10 minutes back, correct? Whether it is for 50%, 80%, 120%, 90%, 0%, when you are not sure how many units you will be producing, you better prepare a budget for all possible numbers. When you do it for all possible numbers, you call it as what? Flexible budget, correct? If it is fixed budget, it will be for one level only, single level. You are saying flexible, that means it is for multiple levels. Question number 12. Guys, since you have done already a lot of practical sums, I have intentionally kept more theoretical MCQs, because theory MCQs where a lot of students go wrong, silly mistakes, they don't read question properly, they don't understand how to eliminate wrong answers, so it becomes easy for them to choose the correct answer. Practical sums, I know very well, you guys would have already solved a lot of sums, therefore it's important we give little extra stress on the theory MCQs. Yes, let's move on. Master budget contains only sales and purchase. No. Sales, production, purchase, this is okay. I will still see what is the next option. All departmental budget, this is the perfect answer. When I say all departmental budget, now there is no question also what is included, what is excluded, everything is included. All departmental budget, that means production, purchase, sales, marketing, consumption, labor, everything you club together, that one main budget will be called as master budget. Question number 13. Budget manual is a dash. Document discussed in AGM, no, that is your balance sheet, P&L, cash flow statement. Document containing summary, assumption, all working papers of budget looks correct to me. Next option, however, let me read. A preliminary document prepared by BOD. No, it's not a preliminary document. It's a complete document. Budget manual. It's a kind of book file which has every information and a summary at the beginning. All of the above is wrong. It should be document containing summary, assumption and all working papers. Yeah. Let's move on. Question 14. Zero based budgeting believes budget should end with zero. There is no budget on earth like this. Yeah, budget should end with zero. That's not possible. Budget should start from zero once in 5 years. Sir, we are not making 5-year plan here. This is not 5. No, there is no reference to this number 5. Correct. Budget should start from zero every time. This is the correct answer. Every year when you prepare budget, you don't take the last year as the basis. Yeah, everybody, if you are preparing theory also for examination, the zero based budgeting is an important theory concept. They can even ask a 4 marks theory question on zero based budgeting. Okay, activity based budgeting, zero based budgeting, performance budgeting, these are some important theory questions. Especially budget topic, theory is equally important. If you are spending say 1 hour one day before exam on practicals of budget, at least spend 30-35 minutes on theory also. Budget topic, especially budget topic, theory is important. Okay. Question 15. Performance budgeting is mainly used by private, government, foreign, all of them. Government organization is a more appropriate answer. Correct? Because government organization, for them, they've invested money. What is more important is not how much revenue they can get. Correct? What's important is whether it is serving the main purpose. Serving the main purpose. That becomes more important to them. I hope you are able to understand. Yeah. We have invested 10 crore rupee to make this flyover. Now we may not earn any income from flyover, but then is it helping public? Is it really reducing the traffic? Is it saving people's time? Is it really serving the purpose for which we spend money? We may not get revenue. Correct? It's zero revenue. But then is it really helping? Metro, rails, port, airport, when they invest money, they will not worry much about return. No doubt, in some cases you may even have return, but the focus is whether it is really serving the purpose or not. This performance budgeting also 2 marks or 3 marks short note type of question can be asked. Very important. Budgetary control includes option A, establishing the budget. Second, continuously comparing actual with budget. Third, taking suitable remedial measure to achieve the derived objective. All of the above is the answer. Understand, budget is only one stage. Budgetary control is a bigger thing. First you prepare budget, then continuously compare with actual, analyze the variances, and then if required, make necessary changes in the budget. You may have to prepare new budget altogether. Correct? All of this put together is called budgetary control. Question number 17. A flexible budget, number 1, can be suitably recasted. Correct? Name itself is flexible budget. 50, 70, 80, 90, any level of activity you want, it can be recasted. It is designed to change according to change in level of activity. Perfect. It shows the impact of various expenses on the operational aspects of the business. All of the above. In fact, if they ask you write short notes on flexible budget, these are the 3 points you should write. Yeah. Fixed budget is exactly opposite. It can't be recasted. It believes that only one level of activity is possible. Correct? It believes you will work at 75% capacity only. No question of 50, 60, 70, 80. Only one level. Right, sir. Done. With that, we finished all the important MCQs of budget and budgetary control. I discussed about 17 questions. Now quickly reply in chat box. Do you have Calci with you? You may have to work out few questions now. Can I get a quick reply? marginal costing, you may have sums to solve. Okay, chalo, let's begin. Variable cost will not increase or decrease in total. It will remain fixed on per unit basis. It varies on per unit basis. It remains fixed in total. Read properly. Name is variable cost. So what is the basic feature of variable cost? Per unit level it should remain same. Correct? They said will not increase or decrease in total. This is wrong. Remains fixed on per unit level is correct. Varies per unit is wrong. Remains fixed in total is wrong. So option B, remains fixed per unit is the correct answer. Let's move on. Question number 2. Make or buy decisions are made by comparing dash cost with the outside purchase cost. Only variable cost is compared with outside purchase cost. What is this? A company, say, which makes shirts, they are buying buttons from outside. They are thinking, why should we buy it from outside? If we have some space in our factory, can't we make buttons in-house? Now, when you are thinking of making buttons in-house, you have to first calculate the total cost of making that button. That should be compared with outside purchase price of the button. Now, when you say I'll calculate the total cost of making a button, you will not again consider factory rent because it's a fixed cost, and that factory rent you will anyway have to incur whether that button is made in-house or not. Correct? Anyway, you have space in the factory. You only have to consider the variable cost of making button, not the total cost of making the button. That means answer is option C. Only variable cost should be compared with outside purchase price. Right. Question number 3. I want everybody to try this. When sales volume is 4,000 units, average cost is 4 rupee per unit. When sales volume is 6,000 units, average cost is 3.5 per unit. Variable cost per unit is dash. I want everybody to try. Sales volume 4,000, average cost is 4 rupee. That means when you are at 4,000 units, total cost is 4,000 into 4. Let me also do in calc. 4,000 into 4, 16,000. But when you are at 6,000, total cost is 6,000 into 3.5, 21,000. Correct? Now, question is variable cost. How to do variable cost? We have a formula. Remember, change in cost by change in activity. How much is change in cost? 21,000 minus 16,000, 5,000 rupee divided by, not 50,000, let me correct this, yeah, 5,000 divided by change in activity. Change in activity is 2,000 units. Therefore, I am getting 2.5 rupee. Those in the chat box, can you confirm? Is this correct? 5,000 rupee change in cost, 2,000 units change in activity. Variable cost is equal to change in cost by change in units. Sir, should we mug up this formula? Please think logically. You are calculating variable cost and name is variable, correct? And formula says change in cost by change in unit. What can change is only variable. Think, why to mug up the formula? What can change is only variable. Fixed cost is anyway not going to change. Fixed cost is anyway not going to change. That means what varies is variable. So it should be simply change in cost by change in unit. The result can't be fixed. Result has to be variable. Yeah. Let's move on. 2.5 is the answer. Question number 4. I want everybody to try this. Following information is given about RS Limited. PV ratio 40%, margin of safety 50%. If sales volume is 60 lakh, net profit will be dash. First understand sales is 60 lakh. In that, they have given margin of safety 50%. That means break-even point another 50%. So break-even point becomes 30 lakh. Hope you are able to follow. Correct? Now from break-even point, I can find out fixed cost. How to find out? break even point is equal to fixed cost by PV ratio. Left hand side 30 lakh, fixed cost I don't know, PV ratio 0.4. That means if I do 30 lakh into 0.4, 0.4 meaning 40%, 12 lakh is my fixed cost, correct? But they want profit, correct? Now what to do? 60 lakh rupee sales, on that apply PV ratio 40%. So you directly came to 24 lakh rupee. What is 24 lakh? Contribution. Sales into PV ratio contribution. From that you minus 12 lakh rupee fixed cost. Answer is 12 lakh rupee, option C. By the way, if you are finding it difficult to catch up, you can watch this video once again later. But you can also try. You have sales with you, MOS is 50%, balance should be BEP, and for BEP formula is fixed cost by PV ratio. You substitute BEP value, fixed cost you find out, then start from the beginning. Total sales 60 lakh, on that PV ratio 40%, you get your contribution. From that, if you minus fixed cost, you get profit. I hope it is okay. Yes. So the correct answer is option B, 12 lakh rupee. Sorry, not B. Option C, 12 lakh rupee. Yeah, 12 lakh is the correct answer. Question 5. Selling price of a product 30 rupee, variable cost 20 rupee. 2 hours of skilled labor is required to make 1 unit of A. Contribution per labor hour will be dash. First find out contribution per unit. 30 minus 20, 10 rupee contribution, and they want contribution per labor hour. 10 rupee you will earn if you spend 2 hours. That means 10 by 2, 5 rupee is the answer. Simple question. Contribution per unit you anyway know how to do, but they want contribution per hour. So do contribution per unit, divide by number of hours. Done. Next. Question number 6. If standard output for 8 hours is 280 and actual output in 10 hours is 420, efficiency level will be dash. Simple. For 8 hours, 280 units. That means for 10 hours, how much I should have produced? Simple cross multiplication. Observe, standard output for 8 hours is 280. Then actual output in 10 hours, how much I should have produced? 10 into 280 divided by 8. I should have produced only 350 units. But sir, we have actually produced 420 units. Fantastic. 420 units divided by 350 into 100. You are working at 120% capacity. You are working at 120% capacity. Sorry, 120% efficiency. Where you should have produced only 350, you are producing 420. That means efficiency ratio is 120%. Are you getting the numbers? In 8 hours, I should have produced 280. That means in 10 hours, I should have produced 350. Simple cross multiplication. But I have actually produced much higher, 420. So 420 by 350 will give me the percentage. Yes. Next. Question number 7. Fixed expenses 64,000. Break even point 1,60,000. Assuming PV ratio remains same, find out profit or loss if sales are reduced by 10%. First observe, break even point is 1,60,000, fixed cost is 64,000. You can do this. BEP in rupees is equal to fixed cost by PV ratio, and BEP is 1,60,000, fixed cost 64,000 by PV ratio. Correct? With cross multiplication, you can get PV ratio into 64 should be equal to 160. So 1,60,000 by 64,000 no, sorry, PVR into 64, sorry, I am doing a mistake, 64,000 divided by 1,16,000 into 100, PV ratio 40%, correct, PV ratio 40%. Now they are saying PV ratio will remain same, find out profit or loss if sales is reduced by 10%. First of all, I should have loss. Why loss? Because break even itself is 1,60,000 and they are saying your sales will be 10% less than BEP. If I am less than BEP, I should be in loss. How can I be in profit? I hope you are understanding. If my sales are below BEP, I will be in loss only. Correct, sir. Now what happens? 1,60,000 minus 10%. 1,60,000 minus 10% if you do, $144,000 sales. On that 40% PV ratio if you apply, you will get 57,600. From that fixed cost is not going to change anyway, minus 64,000. That comes to negative 6400. Negative meaning loss. Option C is the correct answer. Option C is the correct answer. I hope you are getting the numbers. Using BEP, I found out PV ratio. On new sales, I applied PV ratio. I got contribution. From that I minus fixed cost. I have now got profit or loss. It has to be loss because I am selling below break even point. Can I continue? Everybody? Yes. Question number 8. Which of the following formula cannot be used for calculating contribution? The wording is cannot be used for calculating contribution. Fixed cost plus profit. This can be used. This is reverse working because bottom is profit. For that, if you add fixed cost, you will go to contribution. So this is okay. Fixed cost plus loss. They are saying plus loss. We should be little careful here. I'll keep it pending. Next, sales minus variable cost. This is correct. Sales minus variable cost. I will get contribution. No doubt in that. Fixed cost minus loss. Observe now. Between option B and option D, think. They are saying which formula cannot be used. Fixed cost plus loss cannot give you the correct number. Fixed cost minus loss, because loss is already a negative number. Everybody please understand. Option B is the answer to this. Those who are not getting the answer, you think, you put some numbers. 10,000 fixed cost, 5,000 loss. When I say loss, it's negative number. So fixed cost plus loss will not help. Correct? Fixed cost minus loss will help you, because loss is already a negative figure. Remember, loss is already a negative figure. Therefore, option B is the answer. Those who are getting little confused, I told you put some numbers. Write some sales 100, variable cost 80, contribution 20, fixed cost 10, and then profit 10. But now confusion is with loss. Therefore, make fixed cost as 30. Now this is minus 10. And now you see which formula will help you. Correct? Because loss is already a negative figure. That's where students go wrong. Let's move on. Question number 9. I want everybody to try this. Pro Shirts Limited manufactures 3 types of shirts: standard, premium and elite. Standard, premium, elite. Okay. The unit selling price is 500 rupee, 800 rupee, 1200 rupee. Okay. Corresponding variable cost is also given: 300, 500, 600. So if I do this, I get contribution. This is 200, this is 300, this is 600. Quantity wise weightage is also given. That means 0.5, 0.3 and 0.2. Fixed cost in total is 60 lakh. They want overall BEP. For overall BEP, remember the formula: fixed cost divided by weighted average contribution per unit. Fixed cost divided by weighted average contribution per unit. For that, I have to first get the weighted average number. So 0.5 is the weight into 200, 0.3 into 300 plus 0.2 into 600. This I think is 100. This is 90. This is 120. If you just add all this, 100 plus 90 plus 120, 310 rupee is the weighted average contribution. Therefore, 60 lakh rupee divided by 310. Final answer I am getting 19354.8. The nearest number 19354 is option B. I will have to go ahead with that. Are you understanding? If the question is single product BEP, then my answer is very easy: fixed cost divided by contribution per unit. But what if I have multiple products? Then it should be fixed cost divided by not one contribution. You have 2-3 items, weighted average contribution. Actually we should do average, but then the weights are not same. One item is 50%, another is 30%, another 20%. Therefore, I cannot take simple average. I'll have to take weighted average contribution. So 0.5, 0.3, 0.2 is the weights. First find out contribution per unit. Multiply that with the weights. You get 310, and this is weighted average contribution per unit. So if you do 60 lakh rupee by 310, you get 19354.8. The nearest correct number is 19. Question number 10. A company that has a margin of safety of 8 lakh rupee makes a profit of 3,20,000 if its fixed cost is 5 lakh rupee. Then actual sale is dash. Now, margin of safety is with you, profit is with you, fixed cost is with you. Actual sale is dash. First of all, margin of safety is equal to profit by PV ratio. From there we can start. Margin of safety 8 lakh. They said profit 3,20,000 divided by PV ratio. Now I can find out PV ratio. 3,20,000 by 8 lakh, 40% PV ratio. Correct? Now if sales is 100, PV ratio is 40. Yes. Now you will have to do a small reverse working. How much is the profit? I am writing here. Profit is 3,20,000. How much is fixed cost? 5 lakh rupee. That means contribution should be 8,20,000. Understand, in reverse working, they are not going to check how you got the number. So any reverse working, in MCQ format, they are not going to check how you got the number. They only want final answer. Option A, B, C, D. Therefore, you can do in reverse working, you can keep it as X and work out the equation. You can use formula, anything is okay. Yeah. Now tell me, 40%, that means if sales is 100, variable is 60, contribution is 40. Now simple cross multiplication, 8,20,000 into 100 divided by 40, I am getting 20.5 lakh rupee. I can see Divya, Harish, yes, both of them have sent option A, correct, 20.5 lakh. You might have done in another style, keep sales as X from there, or you might have used the formula, desired sales formula. You can use many ways of doing marginal costing sums. Any style is okay. Yeah. So correct answer is 20.5 lakh, option A. Question 11. X Limited manufactures product G which sells at 20 rupee per unit. Fixed cost is given. Marginal cost means variable cost. Calculate the number of units to be sold to earn a profit of 10% on sales. Observe, they want number of units to be sold. That means they are asking you desired sales quantity is equal to fixed cost plus profit divided by contribution per unit. Yeah. Now, do we know fixed cost? 792,000. How much should be the profit? 10% on sale. I'll keep it as 0.1x. sales should be X, correct, divided by contribution per unit 20 minus 14, that is 6. Now cross multiply, 6x is equal to 792,000 plus 0.1x. If you move it here, 5.9x is equal to 792,000. 792,000 divided by 5.9 5.9, I am getting, did I do a mistake here? Fixed cost 792, profit is 10% on sale, let sales be X, and contribution per unit will be 20 minus, okay, this if I divide by selling price 20, looks like I have taken a wrong number. Number of units to be sold to earn a profit of 10% on sale. So desired quantity is equal to fixed cost 792, profit, oh no, I did a mistake. I can't apply 10% on X. Guys, 1 second. I have done a mistake. I have taken desired sales quantity. Better to do it on PV ratio basis. Wait. This is desired sales in rupee. Then this will be PV ratio. This rupee I can keep it as X. This I can keep it as X. Now this can be written as 0.1x. I applied 10% on quantity. That was a mistake. To be divided by now PV ratio. How to do? 20 minus 14, 6 rupee. So if I do 6 by 20, 0.3. Now this is 0.3x is equal to 792,000 plus 0.1x. I'll move it this side. 792 by 0.2, 39,60,000 is the value of X, and X is rupee. This I will divide by selling price 2198,000. Option A is the answer. Yeah, I took a small mistake. I worked out percentage on quantity. It's not on quantity. It should be on rupee value 198,000. Yeah. Let's move on. Question 12. Yes. What is the meaning of zero margin of safety? Zero margin of safety means what? You are not in safe zone, but you are not in danger zone also. Zero margin of safety. Neither you are making profit nor you are making loss. Sir, that means you are at BP, correct? At BP, what happens? Company is in loss? No. Company is making no profit, no loss is correct. Company is making profit, none of the above. Answer is no profit, no loss. Zero margin of safety, meaning your sales is exactly equal to BP. Yeah. Question 30. Give a try. A company has a sum of 30 lakh rupee which is invested in a business. It wishes to earn 10% after tax return. That means PAT should be 3 lakh rupee. Correct? Before this I have to pay tax. Then I will get PBT. Yes. Continue. It is revealed from the present cost data analysis that variable cost is 60% of sale and fixed cost is 1,75,000. So fixed cost is 175. On the basis of this information, you are required to find out sales volume to earn 10% return after tax, assuming tax is 20%. Now, if PBT is 100, tax itself is 20. That means PAT is 80. Now first do cross multiplication. 100 into 3 lakh divided by 80. This number should be 375,000. On that, if I apply 20%, that is the tax. Now PBT done. Fixed cost, if you add back, you will get contribution. How to do that now? 375,000 plus 175,000, this should be 5,50,000, correct? And they have mentioned that the variable cost is 60%. That means contribution is 40%. So if this is 40, how much is 100? One more cross multiplication will give me 1375,000, which is 13,75,000. 13.75 lakh, 13,75,000. I hope you understood. Since we are in MCQ format, we don't have to do everything neatly. You can improve your speed, you can work out faster and save time actually for the descriptive section. Yes. Whenever they say after tax, remember your formulas will give you before tax. You have to minus the tax. Therefore, first itself I wrote 30 lakh into 10%. From there with the tax I did all the reverse work. Yeah. Let's move on. Question 14. Shutdown point indicates dash. Amount of loss if plant is temporarily shut? No. Level of activity above which it is good decision to shut the plant? No, no, no. It's not above. Profit when the plant is kept under shutdown? No. Level of activity below which it is a good decision to shut the plant? Option D is logically the correct answer. Shutdown point is a level at which if you go 1 unit below that point also, it is better to close your factory. It is better to close your factory than keeping it open. That is the meaning. So if you go below, then there is a problem. Question number 15. Which of the below formula is correct? Profit is equal to MOS quantity into contribution per unit. This itself is correct. Let's see. BEP into PV ratio. At BEP, you cannot make any profit. MOS quantity into PV ratio is wrong because PV ratio is in percentage. If you apply percentage on a quantity, how will you get profit? Profit is in rupee. Yes. MOS quantity into contribution per unit. Sir, what is the meaning of this? Imagine selling price 10 rupee, variable cost 6 rupee, contribution 4. BEP 10,000 units. If that means at 10,000 units, your profit is 0. If you sell 10,001 unit, what will happen? That 1 unit will generate 4 rupee profit. 4 rupee contributions are not profit. Think 4 rupee contribution itself is 4 rupee profit because full fixed cost is recovered at 10,000 units. Anything over and above 10,000, each unit that you are going to make and sell keeps adding 4 rupee, 4 rupee, 4 rupee to the organization. Anyway, fixed cost is fully recovered. All of this will become your profits. Question 16. Continue or discontinue decision is based on selling price minus variable cost only. What does it mean? As long as a product is giving positive contribution, we should continue that product. As long as a product is giving positive contribution, we should simply continue that product. Correct? That means it is sales minus variable cost. Question 17. Major difference between absorption costing and marginal costing. Let me explain first. Absorption costing is how you prepare cost sheet. Absorption costing is how you prepare cost sheet. In cost sheet, you take all varieties of expenses, fixed, variable, semi-variable, everything. But in marginal costing, from the beginning of the topic, we have been saying in marginal costing only variable cost is relevant, fixed cost is irrelevant. Fixed cost is of no use. We don't even consider for any decision making. Correct? Now read. Marginal costing uses variable cost. Absorption costing uses fixed cost. No. Absorption costing uses total, not just fixed. Marginal costing uses total. No, no, that's wrong. Marginal uses variable. Absorption uses total. This is correct. Marginal uses fixed, completely wrong, sir. There itself it's wrong. Option C is the correct answer. Let's move on. One more question. If company's total cost is only variable cost, what does it mean? They have zero fixed cost. Zero fixed cost. When will such company suffer losses? Now understand, entire expenditure is only variable expenditure. How will you make loss? Sir, only when sales is below variable cost. That means I have bought a pen for 27 rupee, I am selling it for 26 rupee, 25 rupee, 24 rupee. That's the only case where I will be in loss. Correct? Variable cost is higher than sale. Option C is the correct answer. If variable cost is more than sale, then I can never make profit. Anyway, fixed cost is zero. Then also every unit variable cost is high, sales is low. How can you make profit? Cost is always ahead of income, right? Yes. Chalo, good. With that, we are done with one more topic, marginal costing. One last topic is standard costing. Let's begin. Here we go. Question number 1. Material yield variance. How to find out yield variance? Yield variance is a subdivision actually. Yield plus mix will give you total usage variance. Now read. Usage minus price. Usage minus price is wrong. Usage minus mix is correct, because yield plus mix together, yield plus mix together is usage. So from usage, if I take out mix, then I am getting yield variance only. I hope you understood. Mix minus usage, mix minus price is all wrong. Yeah, this should be option B only. Let's move on. Question number 2. Yes, budgeted fixed overhead for a period 20,000 units, 60,000 rupee for a certain period. Actual production 23,000 units, 62,000 rupee actual expenditure. Both units are given, amount is given. Expenditure variance is dash. For expenditure variance, you don't need any formula. You are not doing capacity, efficiency, volume, blah blah blah. Simply expenditure variance. What was supposed to be spent? 60. What have you actually done? Sir, 62,000. Have you spent extra 2,000? Yes, that's all. 2,000 adverse is the answer. For expenditure, you don't have to think too much. My rent was supposed to be 60,000. I've actually paid 62,000. Now it doesn't matter how many days, how many hours, how many units. 60 became 62, 2,000 extra. Yes. Next. Question 3. Standard hourly rate is 7.5. Actual hourly rate is 6.8. Labor rate variance is favorable. Actual labor hours worked is dash. Question is rate variance. First of all, labor rate variance. How to find out? Actual hours into standard rate minus actual hours into actual rate. Correct? Rate variance. That means I should not change time. I should change only the rate. Which data we have? 7.5 standard rate. Okay. 6.8 actual rate. Okay. AH we don't know. AH we don't know. But we know the difference is 2,800 favorable. Favorable means positive. Yes. 2,800 is equal to actual hours is common. Inside bracket 7.5 minus 6.8. 7.5 minus 6.8 is 0.7. Correct. Now if you do 2,800 divided by 0.7, you get 4,000 hours as actual hours. Option B is the answer. You might have done it in a shortcut way, in a reverse working way. Anything is okay. And that too in MCQ. If you don't get the correct style or correct approach, you have 4 options. Put each option and see where it works properly. Because you already know 2,800 is positive favorable number. put all the options and check which one is matching. Whichever matches, that you tick, but that's the last option. Don't learn subject in that style. Yeah, don't learn the subject in that style. But worst case scenario, put all numbers in exam and see which one works. Yeah, right, sir. Let's move on. Question number 4. The following figures extracted from the books of a company: budgeted overhead 20,000 in that fixed and variable given, budgeted hours 2,500, actual overhead 21,800, fixed variable given, actual hours given. Calculate variable overhead and fixed overhead cost variance. Variable overhead and fixed overhead cost variance. Now please observe, if you find out any one also, you can tick the answer. See, it says 400 adverse, 200 favorable, 400 favorable, 200 adverse. That means if I get variable as 400 adverse, I can tick option A. I don't have to worry about fixed portion only. Correct? And between variable and fixed, variable is easy. How to do cost variance? Cost variance is SH into SR compared with actual into actual. Correct? Full variance. Those are doing in column style. Column 1 minus 2, 2 minus 3. Now 1 minus 2, 2 minus 3, if you see 2 gets cancelled, it is 1 minus 3 actually. Correct? How much is standard hours? Do we have? Budgeted overhead variable number given 8,000. Budgeted hours were 2,500. That means if you do 8,000 divided by 2,500, you get the rate 3.2 minus actual hours 3,000. Actual overhead amount itself is given as 10,000. I don't have to worry at all. Correct? Now comes standard hours. Standard, when I am calculating, remember it was based on 2,500 hours. 1 second, let me check. 2,500 into 3.2. From that, if I take out 10,000, no one, do we have the standard? Okay, units are not there. So let me check. 2,500 into 3.2. Yes. Now see, standard hours is always for actual production and actual data is available with us 3,000. Let me see, 3,000 into 3.2. We should have spent 9,600, but we have actually spent 10,000. I think we have spent extra 400. 400 adverse is happening only in option A. I shouldn't even worry about option B, C and D because no other combination will fit. Everybody remember, standard hour is always for actual production. So 3,000 hours at the rate of 3.2, we should have spent 9,600, but we have actually spent 10,000. Difference is 400. Negative, negative meaning adverse. Only one option that fits into this category, option A. Yeah. Let's move. I don't have to even worry about fixed because there is no other combination which will fit. Think, there is no other combination that is fitting. Question 5. Standard material required to manufacture 1 unit of product is 4.5 kg and standard price is 3.2 rupee. The cost accountant's record, however, reveal that 16,000 kg costing 54,000 for used for producing 3500 material. Price variance. Now price variance is actual quantity into standard rate, actual quantity into actual rate. Rate or price, that's okay. Now how many kgs? 16,000 kgs. Okay, 16,000 kgs. Do we have the rate? Standard rate was 3.2 and actual rate I don't have, but amount is given 54,000. So I can directly do this actually. 3.2 if I multiply 51,200. Just check 16,000 kgs into 3.2 and I have incurred 54,000. 2800 adverse, 2800 adverse. Yes, option A is the answer. See, they are not asking standard quantity, mix, yield, etc. Question is simply price variance. Why do you want to work out whether I have consumed more kg, less kg? Question is only rate variance. Price means rate variance. Therefore, I only have to do, if you are doing in column style, this is column 3 minus column 4. Column 3 and column 4 is all about actual quantity. Yeah. Next. Question 6. When time taken to complete a job is more than time allotted. Now, whenever you get confused with this sentence, put some numbers. Time taken, say 10 hours, is more than time allotted. That means time allotted 8 hours. Then efficiency variance. Now think, when the allotted time is 8 hours and if you are taking 10 hours, you are slow. You are taking more time. If you are slow, this variance has to be adverse variance. Correct? It can't be favorable. Favorable is when you complete the job early, but here you are taking more time. It should be negative. Negative meaning adverse. Next, question number 7. I want you to solve this. Direct labor cost data is given to you. Actual hours worked, actual cost paid. Direct labor rate variance, labor efficiency variance, standard labor hour rate they are asking. Reverse working question. Yes. See this. You can prepare a quick table. Standard hours, actual hours, actual hours. Last column is actual rate. Other two columns are standard rate. We do in class in a tabular form. So I am going by that style. 1, 3 and 5. Anyway, there is no idle time story. So column 3, column 4 I am not breaking. Yeah. Those who are not comfortable with tabular style, you can work out based on the formula. No problem. Yes. Now what all data do I have? Actual hours work 30,000. This I can fill here. This I can fill here. Okay. Actual cost 2,40,000. If this is 240 divided by 30,000, this will be 8 rupee. Done. Labor rate variance is 20,800 adverse. By the way, rate variance is column 3 minus 5 and they are saying that is 20,800 adverse. Adverse meaning negative. No, 22,500. Sorry, 22,500. 22,500 adverse is equal to, I don't know this number, let it be x, minus 2,40,000. Yeah, I am not continuing with table. I got the information I wanted. Sir, shift this number this side. Positive 2,40,000 minus 22,500. This will be 217500. Now, if I want this to be 217500, this I should divide by how many hours? 30,000 hours. 7.25. 7.25. Lot of students have sent in the chat box. Very good. Perfect answer. See, in MCQ style, you don't have to do full table end to end. Whatever is required, you take up. You are able to do it so fast because there is no need of neat presentation. If it's a 5 marks question, then we have to write full table, all formulas in detail. In MCQ, if you get what you want, stop there itself. Then continue with the main answer. 7.25. Option C is the answer. Almost everybody has sent the answer. Very good. Give a try. Question 8. Following is related to a job. Standard hours, actual hours, standard rate, actual rate, idle time 7 hours. The total labor efficiency variance for job number 510 is dash. First of all, it has to be adverse. Why adverse? Because there is a wastage of time. Correct? Now I want you guys to try. Everybody, give a try. Standard hours 450, actual hours 498. That means there itself you can make out you have spent 48 hours extra. Correct? 498 versus 450. 48 hours extra. And question is labor efficiency variance. There is no gang variance. Yes. What is the correct answer? Some students are saying option 4 or D. That's okay. Anybody? I'm waiting for you. Two not 5.44. What's the number? Harish is saying 205.44. I doubt. Anybody? I'm checking the chat box. $171.84. Yes. Negative 171.84. Yes. Labor efficiency variance. Observe. Standard hours into standard rate. Actual hours into standard rate. You have 450 hours versus 498 hours. Standard rate is 3.58. 3.58 if you minus basically 48 hours gap to 3.58, 171.84 is the answer. Let's move on. Question number 9. AB Limited uses standard cost system. The following information pertains to the direct labor for product X for the month. Standard rate per hour, actual rate per hour. Standard hours allowed for actual production, labor efficiency variance, what were actual hours worked. Guys, I doubt there is one missing information here, because standard rate per hour in rupee, I think the data is missing. I'll do one thing. After this session, I will check what is the correct amount there, because I can see there is a rupee symbol printed, but the number is not printed. Looks like there is a printing mistake. Okay. I will see what is the correct answer, correct question, and check the comment section. I will update question number 9. The mistake will be corrected and you will have the updated question and the answer in the comment box. Okay. I'll do it after the session. Yeah, even if I work out now, it won't make sense because I don't know how much it is. Maybe 4 rupee, maybe 5 rupee. If we start solving, then without clue we will go wrong. Yeah, after the video check the comment box. I will update the answer. Yes. Question 10. Let's try. Records of XYZ Limited reveal the following data. Fixed overhead capacity variance, efficiency variance, expenditure variance, everything is given. They want you to do cost variance. Now tell me, first one is 2000 favorable, next one is 1000 favorable, expenditure is 5000 adverse. Now two favorable variance together is 3000 favorable minus this, I think 2, yeah, negative 2000. Sir, 2000 adverse is the answer. Yeah, by the way, this won't happen in exam. Both option B and C unfortunately is 2000 adverse. Don't worry, in exam this will not happen. 2000 adverse is the answer. Yeah. Alright. 2000 adverse, option B / option C. Okay. Question 11. AB Limited has standard costing system. The following information pertains to direct labor for product X. Standard rate, actual rate. Standard hours allowed, labor efficiency variance, what were the actual hours worked. Now give a try. Efficiency variance is SH into SR minus AH into SR, standard time versus actual time. This number is 2500 adverse, meaning negative 2500, and it says standard hours allotted for actual production is 2000 hours into what was the standard rate, 5 rupee, and this will also be 5 rupee. Actual hours they want you to do. So negative 2500 is equal to 10,000 minus AH into 5, correct. I'll shift it this side, minus 12,500 is equal to minus AH into 5. Now I will shift 5 this side, so 12,500 by 5 minus 2,500 is minus AH, minus minus cancel, it's basically 2,500, option B, 2,500. I could have shifted all numbers that side, AH this side, anyway minus minus cancel, won't make a difference. Option B, 2,500 is the correct answer. Siri, Harish, Rishi, Manoj, all those who have sent the answer, well done, good. Let's move on. Question number 12. Fixed overhead calendar variance will be favorable when? Calendar variance is all about days. Calendar variance is all about days, correct? It will be favorable. When will it be favorable? If I work for more days than budgeted. Read. Budgeted days are more than actual. No. Budgeted days are equal. No. Budgeted days are less than actual is correct. We budgeted 25 days working this month, but we came to factory and worked for 27 days. Now 2 days extra that we worked, 2 days extra that we worked, my fixed cost will not increase. Think factory rent will not increase because I am working on a Sunday. So it will be favorable if we work for more days. Question 13. Mix variance is calculated when there are 3 raw materials, 2 raw materials, more than 1, only 1. Some students out of excitement, they want to tick 3 and 2. Think, even if it is 75 raw materials, you can do mix variance. If all 75 raw materials are mixed and produced, correct? Therefore, correct answer should be more than 1 raw material. It can be 2, 3, 5, 10, 20, that doesn't matter. More than 1, only that matters. 13, option C. Next question, I think this is the last question. Which of the below statement is correct? Favorable variance is always good. Always good is wrong, sir. Always good can't be correct. Then there is something wrong in your standard setting process itself. Yeah. Occasional favorable variance is good. This looks correct to me. Occasional savings, once in 2-3 months we save some money. Again 2-3 months we may have adverse or nil variance. Once in a while here and there if you have some savings, that's a good indication. Adverse variance is good, that is never. All of the above is wrong. It has to be occasional favorable variance is good. Yes. All right. With that, my MCQ discussion is done. Thank you so much, everybody. I hope our MCQ session has helped you in your examination preparation. All these PPTs that I have discussed, okay, I have converted this to PDF and I have already uploaded it on the drive. The link to that drive is in the description box. Please click that and download all these MCQs and use it for your future practice. Okay, and you can share that PDF documents also with your friends who are writing the examination, and also share this video with all of them. It will help. Yes, over last couple of days we have covered more than 250, 260 plus, more than that. I haven't kept the exact count. On an average, every big topic we have done about 20 plus questions. small chapters also we have done more than 15-16 questions. Okay, so I thank all of you very much for joining live. All the very best for your examination, and please download the PDFs of all these MCQs from the link given in description below. Alright, and if any of your friends want to purchase entire costing class, even that is available now on yashasacademy.com. They can download, even that link is available, by the way, in the description box. They can click on that and they can purchase my cost accounting and financial management sessions. Okay, thank you so much once again. Take care all of you. Bye.